Every country has a central bank regulating money supply and ensuring that the banking system works like a well-oiled machine. On the 7th of August, 1964, Zambia established its very own central bank and called it the Bank of Zambia. Headquartered in Lusaka with a regional office in Ndola, the Bank of Zambia has a governor and 2 deputy governors, all appointed by the Republican president. The principal purpose of the Bank of Zambia is to achieve and maintain price stability and ensure Zambia's financial systems run smoothly to foster sustainable economic development. The Bank of Zambia has 4 main functions, namely: Number 1, to formulate and implement monetary and supervisory policies, which means it regulates money supply to positively influence the economy. Number 2, to license and supervise banks and other financial service providers under its jurisdiction. Number 3, to provide efficient and effective banking, currency and payment system services to commercial banks, governments, and other customers, which basically means it is the bank for other banks and the government. Fourth and lastly, the Bank of Zambia is the only institution in Zambia that is responsible for issuing notes and coins. So there you have it. For more information, visit our Facebook page or website at www.boz.zm. This message is brought to you by the Bank of Zambia.
Good morning, everybody. And let me join Bessie in welcoming you to our third quarter briefing. It's in the fourth quarter, but the focus is on the third quarter of 2019. And since this is the last monetary policy briefing that we have this year, may I take this opportunity to just thank you all for having been with us throughout the year, and wish you in advance happy Christmas and a prosperous 2020. It sounds strange to say 2020 because some time back we were saying that's far off, but now it's just around the corner. Let me just run through the outline of the presentation. I'll start out by reading out to you or sharing with you the decision that the Monetary Policy Committee meeting made after these 2 days of deliberations. Then give you some insights on inflation outturn and the outlook over the forecast horizon, which covers 2 years or 8 quarters. Then share some perspectives on GDP growth prospects, move on to monetary operations, then look at government securities market. That will be followed by a look at interest rates, domestic credit, money supply, and spend some time on the foreign exchange market because I think we are, this time around, again, we seem to be under pressure. I think that was the case even last time when we met. We move on to look at the global economic growth, look at selected commodity prices, and look at the current account so that you have an idea how we are faring vis-a-vis the outside world, and also share quickly with you or briefly on what our gross reserves look like and provide a conclusion. So it's a very long kind of list of items to go through, but don't worry, they are not that length in terms of coverage. So I hope that you'll be out of here as quickly as we can. Okay. The Monetary Policy Committee meeting decided to raise the policy rate by 125 basis points. That means from the current rate of 10.25%, it will move to 11.5% effective immediately. Now, in the past, I think we have been asked, when we do this, have we also adjusted the statutory reserve ratio? The answer is no. The statutory reserve ratio remains where it was. Now, what are the factors that the committee took into account to arrive at this decision? I must state from the outset that maybe we have been saying this all along, but I want to assure you that each decision point is a difficult one, because we are mindful of the impact of whatever decision we come up with. So we take a careful look at what is going on in the economy, what is happening around us, what is happening in other places. And we try to do this over a period of 2 years, which is 8 quarters. So we scour through a lot of information and then weigh whether the decision we are making is in the best interest of the country and the people in particular. It may seem harsh, but it's because the conditions are quite tough, and we have to rise up to the occasion to ensure that we don't let things spin out of control, because then we'll be forced into making haphazard decisions. So that's the context I would like you to take into account as you listen to the factors which we looked at in coming at this decision. So in particular, we noted that the projections over the horizon that we are looking at were indicating that inflation will remain outside the target range. The target range that we have been given as an institution to observe is 6 to 8%. Now, this is a medium-term outlook. So we take care whether the idea is to bring it down immediately or it's in the medium term. So what I would like to say in that context is that the adjustment of 11.5% would by itself and on itself be able to bring inflation back in the corridor right away. But it is our expectation that over the horizon it will bring inflation down into the target range. But obviously other actions by other key policymakers will be very, very important. So what we are saying that the risks that we have been highlighting, some of those risks have materialized, and inflation has been on the upward trajectory for some time now. The last reading that we had in October, inflation was at 10.7%. Next week, we'll be also getting a reading from the Central Statistical Agency, which will tell us whether it has gone up further, it has stagnated, or it has declined. But from the risks that we are looking at, they are all stuck on the upward, which means that as we look over the 8 quarters that we are looking at, inflation, if we don't take an action, will remain outside that target range. We also see the need for restoring macroeconomic stability. If we don't have macroeconomic stability, it's very difficult to galvanize any investments. Our incomes will continue to be eroded. So that's what we want to guard against. It's a tall, a tough act, but that's what we need to do if we are to be in the league of progressive countries that are growing. I'll come back to the issue of growth later on. What we are also is that growth, maybe I should move right into that. We note that normally when you raise the rate, there is obviously some unintended consequences. Some of those is the effect on growth, because by raising the policy rate, it means that aggregate demand is being contracted, which means that less economic activity may ensue from that point on. We also note that by raising the policy rate, especially in an environment where liquidity is already quite tight, would have adverse impact on the financial system. But we have to weigh these concerns with the need to get macroeconomic stability, which is a prerequisite to getting growth and getting buy-in of others who would come in to support us in the way of FDI, portfolio investors, and so on and so forth. So these other risks or these other factors, say growth and financial stability, we believe these can be handled through other channels, and they must, because the policy rate is not a tool for all matters. It's a specific tool which can work towards bringing inflation down, but it may not be the best tool to address these other issues. So our point is that while being cognizant of the impact that the raising of the policy rate would have, we also call into effect the other policy measures, notably dealing with the growth, dealing with the financial stability. So that's, in a nutshell, the kind of scenario that we have. Some of the risks, I think, as I go on, you see what they are and some of the measures we are taking, or the effect that the raising of the policy rate would have. Let's take a look at inflation, outturn and outlook. What you see on this table, if you look at the first row, I don't know if I can be able to point. Looks like I'm too far, either too far or this can't work there. Is it pointing? No? Sorry? I think it's not that effective. Sorry? How about this one? Nothing. Okay. Well, we will matter always. So look at the first column. There are three rows and 4 columns. In the first row, we have overall inflation, followed by food inflation and non-food inflation. So what you see in the first column, which is the outcome which we say Q3, which is the quarter which we just come out of. That is Q3 of 2019. The second column is outcome in the second quarter, and then we have the end period inflation in the third quarter, and the end period in the second quarter of this year. So what you see in the first cell there is 9.5%. If you go down the column, food inflation was 10.7, while non-food inflation was 8.3. Now, if you look in the second quarter, you see that in the second quarter, overall inflation was 8.1. These are averages. Food inflation was 8.9, and non-food inflation was 7.3. So compare the two. You see that food inflation moved to 10.7, while non-food inflation moved to 8.3, both of which went up. That's the issue. If you can't remember anything, that's what you should take away. Now, if we look at the end of the period, which is the end of that quarter, which is the month, that is in September, you see that it was 10.5. In June, it was 8.6. That's the overall. Then look at food inflation. It moved to 12.4% from 9.2. Non-food moved to 8.3% from 8%. So what we are saying is that inflationary pressures are building up, and they seem to continue in the period ahead. Food inflation, it's quite clear, I think, to all of you what is driving that. It's mainly the fact that we didn't have as good a harvest in the last season, but the extent of that was not quite appreciated early on. Now we are seeing the full effects of that. Equally, I think we did not quite anticipate the amount of electricity supply shortfall that we are currently facing. So that is also affecting the inflation through constraining supply of other goods through rising cost of production. So you might say, why then are you raising the policy rate? Just to answer that question before you even ask it, is that if we don't do what we are saying we do, these things would continue being a problem for a long time to come. And that is not what we would like to see. We would like to see a correction to some of these that are within our control. Obviously, nature is another matter, but we need to take charge of the things that we have control over. So, food inflation, you may say that perhaps this action may not do much. That's very true, but it can help if we stabilize the exchange rate and then inflation gets down. Non-food, we can affect that, which is high. If that comes down, it can bring overall inflation down. Now, this is graphical presentation of the same, so which must be easier to follow. If you look at the green chart, that's the food inflation. The red is non-food. The middle is the overall, which is just an average or the weighted average of the two. What you can see clearly is that food inflation is really rising quite significantly. I wish I had the pointer here to point to you, but I'm sure you can see how it is going up. Non-food kind of stayed constant in the last reading, but it's still quite high as well. So the fact of the matter is that both are rising, but one is rising faster than the other. Now, in terms of the outlook, what we are saying that there are heightened risks to this inflation. So that means that, as I said, it will remain quite elevated. Now, what are some of those risks we are seeing? These risks, they present themselves through two main channels. The expectations, which could be based on something substantive happening, but they could also be on some bad information that has come about. Then we do have also the exchange rate channel, which is what you see in the movement in the exchange rate when certain things happen. So in particular, we see that there has been persistent high food prices, which we have explained, electricity shortages, which have led to extended load shedding periods. No one is spared here. Even us here at the bank, we face the same challenges as everyone else. Sometimes we have no power, so the use of generators has increased. But many of these units are not meant to operate over extended period of time, so they tend to malfunction. But alongside that, because of that switch, it means that the demand for fuel has also gone up. Now, as you know, we don't produce fuel, we import. Yes, we may refine at Denny, but we have to import the crude that goes into that refinery. So that puts pressure on the amount of fuel we have to import, which puts pressure on the foreign exchange, which is in the economy, and that ultimately also reflects in the exchange rate. So that's the exchange rate channel there, as well as expectations. We saw, for instance, last week when announcement came out to say that ZESCO is also going to be importing some power, the reaction by market participants was that, well, maybe now there will be not much foreign exchange. So that set in motion some adverse reaction. So that spiking that you saw in the exchange rate also stemmed from that. We see that there has been slower than anticipated progress on fiscal consolidation. I think the Ministry of Finance is on record here pointing out that challenge, and it is our expectation and hope that they will come to dealing with that situation as we go towards concluding the discussion on the 2020 budget. Then we have a high external debt service payments. I said that growth in 2018 was 4%, but what we have seen is that there has been this downward revision from the 2.3 we're talking about there. Now it's 2.0. And if things don't pick up, we may see that we may end the year at less than 2%. That's a very low growth rate. And I think it, as I said, calls for us to reflect and figure out what do we need to do differently. We can't continue doing the same thing if these things are happening. We must question our actions. I think that's what we are calling attention to, that if you look at the chart there, we would like to see that chart, that dotted line, red dotted line, to be going up to previous years of growth. If you look over the past 5 years, which is the dotted black line across the page, the slide there, that's the average that we have had, which is about 4.7. So we are growing below even our past average. And that's a concern to us, and I think it must be a concern to all of us. And we must leave at that. We must figure out what is it that we need to do to ensure that growth starts to pick up, and strongly for that matter. Monetary operations. In the case of monetary operations, the efforts, obviously, as we have shared with you before, is to try and get the interbank rate to be within a corridor that we have defined. That is a corridor 1 percentage point above and 1 percentage point below the policy rate. So this has been our preoccupation, but what we noted is that this kind of went out for a brief period in August, but it has since been brought down. So let me show you the chart. This is what we are talking about here. The green line, that's the interbank rate, and the red is the policy rate. So what you see, that was about August, there was this spike, and then through some action it was brought down, but it was quite persisting upwards. But it has since been brought down by the end of the quarter, and to the current time it's within the target. But once we impose now the new policy rate that we are talking about, it will be well within that corridor. So let me go back to here. Now, what we are seeing is that there has been quite some liquidity challenges in the economy. But in our efforts to accumulate reserves to help us with emergencies and the debt service, we have had to buy foreign exchange. And once we do that, it means that we inject some liquidity into the market. Now, it turns out for the period that we are looking at, that has been the major source of liquidity. This is this chart here. We closed Q2 at 0.9 billion kwacha in the current accounts that we maintain here for banks. And that became obviously our opening position for the third quarter. So if you go down the column there, first influence there that we are measuring is net government spending. What you note there, it's minus 2.7, which means that ordinarily we would expect government operations to inject liquidity into the market. But in this year, as you can see from even the Q4 2018, that has been a negative injection, which speaks to the areas that you are seeing in the economy, because much of the resources that government gets is going towards debt service. So that's reflected in this particular chart. The second row there, this is the Bank of Zambia foreign exchange influence. That's what we are saying there, that you see there was that injection of 4.1 billion. That is through the purchases of foreign exchange. Then CIC, this is the currency in circulation. You see, didn't have any influence. In the second quarter, it was actually withdrawal influence, but in this case, it was neutral. Now, usually, I think in the festivity season, we see this pick up. So we'll wait to see. I think when we meet, God willing, in February next year, you see whether there was that injection, or maybe the activities in the festivity season will be much, much lower. But again, here I think I should quickly point out that this is also affected now by the emergence of these digital operations that we do in the financial market payment systems. So the use of cash is somewhat also reducing because of those channels. Then change in statutory reserve deposits, that was also withdrawing. So all I'm saying is that liquidity was quite tight. The main source of liquidity in the domestic market was the purchase of foreign exchange by the Bank of Zambia. So the other aspect we are trying to say, I think that is already reflected, which is this chart here. Now, what I was saying, that to bring this overnight, this rate in, we do undertake open market operations. But this time around, we did something else also before coming to this meeting. Last week, I think it's on Thursday, we did issue a circular, which I think some of you have seen and quoted, where we adjusted the overnight lending rate from where it was to 28%. So this was intended to bring about to address some instabilities that we had observed in the market, notably that our rate was much lower than some of the rates. In particular, if you take the 364 days Treasury bill rate, was much higher than our rate. Now, the issue is that if that persists, an opportunity is created for market players to come and get cheaper money from the bank and use it for speculative purposes or other purposes. So we had to close that gap by raising the overnight lending rate by the margins that we did. So what that means is that the rate has kind of moved, or it moved before this adjustment we are making today. Previously, what used to happen is that we wait for that rate to be adjusted when the policy rate is adjusted, in which case we add some percentage points above the policy rate to arrive at that. But in this case, because this is an operational matter, we had to take that action quickly and not presupposing what the policy rate will be. We had to look at what is obtaining in the market and fixed that rate at 28%. Now, following today's announcement in the adjustment to the policy rate, we will still leave the OLF rate at 28%, which means that the difference now between the policy rate and the OLF rate will be 16.5%. So it may signal that we have reduced. No. If you take the increase in the policy rate of 1.25 percentage points, you would have to add to that. That will give you the full extent of the adjustment. So this is a matter I think people have commented on in the different fora, but we just want to clarify to you that we had to make this, which is an operational matter, to address some challenges that we observed in the market. And you see that following that adjustment last week, there was a reaction in the foreign exchange market. The exchange rate kind of gained some of its lost points, but it has since gone back up because of persistent demand pressures in the market. Government securities. This is an area where we have said before that has continued to have challenges in that the government is not able to raise as much financing from these two instruments, which are treasury bills and bonds. So you see the chart there, it's really the trend is coming down. Now, if you look at the table on the side, on the left side, the top part is showing treasury bills. What you see, the last column of that table, it gives you the subscription rates. What you note is that the Q3 moved to 75%, whereas in Q2 it was 79, which means that the subscription rate came down by 4 percentage points. So which means that the intended raising or the funds to be raised could not be raised. Equally, on the treasury bills, on the bonds, what you see is that previously it was 15%, there was some upward movement to 35%, but still quite low. Now, overall, what we note is that these, though not to the extent of 100% or what was expected, they were just enough to meet the maturities that were coming up. So which means that the government only managed to raise enough to pay for the maturities. But there were other activities, there were what we call private placements, which you see in the statement, which resulted in the overall stock of government securities to go up nonetheless. So this is what we see here. On the left hand side, these are treasury bills. On the right hand side, those are bonds. So what you note is that, the right side, no, they are combined. These are on the right. I wish I could, let me sign here. The red is the bonds, the blue is the treasury bills. So what we are saying, this is the treasury bills, and on the right is the non-resident. So this is showing the instruments. On the right, we are showing who is participating in those instruments. So let's start with the one on the instruments themselves. What you see that we have 51 and 20, which together gives rise to an increase to 72.3 billion kwacha. Now, non-resident holdings, on the other hand, declined by 9.7% to 7.4 billion. So that's what we are trying to show on the right. Now, which instrument are they holding? The red is the bonds, then the blue is treasury bills. So what you can conclude from there that virtually all their holdings are in bonds. So they moved out from treasury bills, although there is a slight kind of blue there that you see that they came. So the issue I was talking about, the area of macroeconomic stability, is a factor to this. When they assess that there is macroeconomic instability, they quickly move somewhere else. So that affects our securities market. Now, interest rates, in the period that we are looking at, they all trended upwards, except for the savings rate for deposits of 180 days and those above 20,000 kwacha, which kind of remained constant. Now, here, what we are trying to show you is the different types of interest rates. We have combined this with the lending rates and the treasury bills and bonds rates. So if you look at the blue one, this is the average lending rate. So it had started to come down, but it's persistently now rising. But now you see that one, which looks like a head of, I don't know, is it a giraffe or something? That's now the yield on bond. So you can see that that really sharply rose. Now the point, then the green, that's the weighted treasury bill rate. Then we see this other, is it orange? Down there, that's the black is the policy rate. Then that orange down there, that's the interbank rate. So the policy rate and interbank rate are kind of married, as I explained before. But the point to note also here is that the questions have been raised. Why are interest rates high, continue to be high? This, in a way, gives you some insight of what the dynamics are. Now, the bond rate and the treasury bill rate are rates what we refer to as risk-free rates. Meaning, if you put your money in government paper, you can go take a holiday, you don't have to do anything. So, but in the meantime, by virtue of the fact that you bought a government security, interest rate is keeping up. So that is, if that is rising, then is competing with that which is risky. The risk one, the average lending rate, we haven't shown the other rates, but this, I think, is the main one. So what we are saying that our efforts to bring that blue line, which is what is intended through these policy rates that we do, is to influence that. But if the interest risk-free rate is higher, it kind of becomes a tall order to bring the interest rates down. So this is where we have been saying that no, there are still some things that need to be done to ensure that the risk-free rates should be actually, if not below, the policy rate. then the policy rate would have an effect. But right now, it's a struggle. So we are competing, those who want to buy government paper. So this is why we are talking about that the government reducing the deficit to sustainable level will affect those and the entire interest rate structure in the market. So that's the import of this, if it's something you want to as a takeaway. So just some further clarification on the rates. I think what we noted that the range of interest rates in the for deposits, quite new kwacha deposits, because we have to look at the new deposits, not the old ones. We see that that range also widened. Domestic credit. In the case of domestic credit, what we are saying that also we saw it decline by 10.1% year on year. Now, this is a concern, especially with regard to the productive, the private sector, that if credit is slowing down, it shouldn't be surprising to you that growth is also following suit. But as I said, you may say that, why then are you doing this? But I will repeat it. If we don't do what we are doing, this is unlikely to change for the better. If anything, we'll be caught up into a situation where we may have what we may term stagflation, whereas we have stagnance, but inflation is going up, which is a very, very difficult situation to come out. So we don't want to get into that, because the prospects of turning things around are still quite bright. Money supply, with the credit going down, the growth coming down, it's not surprising that money supply also is low, because these go hand in hand. You want to have more money supply to support economic activity. So if there is not much economic activity going on, money supply also is reduced. So this is not surprising in the current situation. Foreign exchange market. Here now is one of the areas which I think generates a lot of interest and discussion as to what is happening to the exchange rate, what are the factors in there. So here first we just show you the movement in the different exchange rates. We start out with the Zambian kwacha, with the US dollar, Zambian kwacha with the British pound, Zambian kwacha and the, I can't see from here, the euro, and finally the South African rand. So if you look at Q2, the kwacha was exchanging at 12.89 kwacha to a dollar. In Q3, slight movement, 12.97. So what we note is that actually there was relative stability in the quarter, because the change, the percentage change, was just 0.7. Depreciated, but within tolerable levels. If you look in the case of the kwacha and the British pound, the negative shows that it appreciated the kwacha, so it appreciated with respect to the other currencies. Now, if we move further, this is the graphical presentation of the same over an extended period. So we see at the tail end, those are the movements we are talking about. So the red is this one, the Zambian kwacha and the US dollar, the British pounds, and this looks like here you invested the measurement, because the other side we are saying kwacha, the dollar. Here is saying dollar and the other currencies, I mean the kwacha. So anyway, the point is the same information, but giving you over an extended period of time. Now, what we are saying here is that beginning in November, remember I said we had the 0.7% depreciation in the entire third quarter. But when we came to November, things changed. The kwacha came under severe pressure, such that it moved quite quickly to 14 kwacha per dollar. So now, what were the factors? Remember I said that with the constant load shedding, there was a lot more use of other means, notably fuel. So demand for fuel went up, so that has to be imported, because as you know, Indian is not sufficient to supply in any case, so some final products are also imported. So that was in the market. It has continued to be a pressure. Then there was the issue, because when the farming season, the still imports of fertilizer, but then there was this pronouncement that ZESCO also would be. So when that came in, it just hastened the pressures that were already in the market. So that's how we see the kwacha losing a lot of ground. And the part of the action we did last week was to try and restrain that movement, and for a while, as I indicated, it kind of retracted, but demand has continued to be quite significant. But now the first payment of the ZESCO imports has been done, so we are now remaining with the other payment. So that's why we are saying that we should arrest this situation so that we can get some support from other players. You have seen this announcement of these other structural measures which are to look into this sector. The issue of the cost of study also going ahead. So cost of service study. So all these are efforts to try and deal with this matter in a more sustainable manner. Now, who supplies and who demands foreign exchange in the market? So we have that vertical line. On the right of this, these are the suppliers. On the left, those are the people who use foreign exchange most. So you see that public administration continues to be the major. This is the debt service I was talking about, the issue of the importation of fuel that we are talking about. So you see they dominate. Now on the supply side, the mining and the quarrying continues to be the major source of supply. But you will note quickly that operations of the mines have also been having some challenges, which means that supply has also reduced of what they are producing. Then coupled that with the copper prices, which in some cases have come down. So you see that our exports have shrunk, so are our imports. So the end result is that the economy has shrunk from that perspective. So that leads directly into the issue of the global growth. Unfortunately, the global economy is also slowing down, which has implications on the export of copper, the copper prices, and actual demand. So what are the factors underlying that? You see persistent trade tensions. They are creating a lot of uncertainties. I think some of you may have seen even the Brexit issue. When they look at the uncertainty which is generated by these tensions, is actually much more than what the Brexit itself is creating. So we see also declining business and the consumer confidence. That's at a global level. Heightened policy uncertainty the Brexit issue, geopolitical tensions in the Middle East, the fighting which is going on, all these are affecting. I think next time when we meet, we may have these also. There have been social unrest in some of the countries, Hong Kong, for example, Bolivia, Argentina. All these have implications for the global economy. Now, of significance also is that for the first time, there is a synchronized down, a slowdown of the global economy. In the past, some parts of the world were growing while others were declining. But this time around, it's all around us. So that is a wake-up call also to us. How long are we going to continue to depend on outside world? That's the question we must ask ourselves. It's time we started looking a lot more to what we can do to raise our own growth, deal with our unemployment issues, and other needy things. So the global economy is showing that it's declining. That's the measurement which the IMF gave during the annual meetings. Consistently, it has been downgraded. Now it stands at 3%. So that's something to look at and think, what can we do for ourselves? Commodity prices, there we are showing, you see copper prices are saying they are coming down. There you are, you can see the first row there, Q3 2019, come down to 5,700 and $42 per ton. See where it was in Q1 this year. It was 6,200 and 6,226, but now it has come down. Then you look at oil prices. For us, at least it has been low, but for oil exporting countries, that's a major worry for them. So as they say, one person's food is another one poison. So these are things to be aware, to be alert to. Wheat, see that also has come down. Maize prices, they came down, but you may say that, well, global market, that's not what is happening here. So domestic circumstances matter, but on the global scale, there is that phenomena. There is some grain there, which if we had money, we can import. Cotton decline. Sugar is one which has remained constant. Soya beans, you see that it went up, so maybe that's an area to go into, but it means that for the livestock farmers and all these soy products, it means the prices will also go up. Current account. Here, this is the balance of payment, which is our balance sheet vis-a-vis other countries. Now, I must say that this is an area where a number of changes are done. Unfortunately, they don't coincide with the monetary policy calendar. So what you see when you look at the statement that we issued last time, you see that actually we had shown a surplus. But when revisions were done, following the survey that is done, we found that actually we went into a deficit of $92.4 million, which is 1.6% of GDP. That's not too bad. That's not bad. So when people look, that there is still quite some prospect here of growing the external sector. Now, as I said last time, there was a surplus, so now I have moved to this, so start interrogating now what is happening. Now, the overall balance of payment table is right here to give you the details. The top line, that's the one where, top row, that's the one where I'm reading from the current account. You can see it's $92.4 million. It had been in surplus before. So our interlocutors, they look at this, they say, what is happening? Okay, in the balance of goods, that's where the pressure came from, because although it's in surplus, the surplus declined. So that's where the pressure is coming from. So why is that? Look at the copper, the exports, they came down. Non-traditional exports, they went up, but not sufficiently to outweigh the decline in the copper exports. So overall, you get that contraction. Imports, they went down, but not in the same extent or the rate as the exports. So that's why at the end, you get a negative outturn. So now, to finance that deficit, you come to the financial account here, which had some money, and the surplus from that, which was left, is what was available for us to purchase to augment our foreign exchange reserves. So this is where that is coming from. Now, of significance here is that gross international reserves actually increased in the third quarter. They went to $1.5 billion, which was representing 1.8 months of import cover. This was an increase from 1.4, representing 1.7 months of import cover. But if you look now from December 2015, you can see that our reserves have been on the downward trajectory. So if we are to superimpose the debt service, that's what is informing that decline. But of import on this chart is that if you look towards the end of that blue line, or even the bars there, you can see that kind of upward tick which is coming. That's because of the purchases that we had to make in the market to augment and also be able to meet some of the debt service that was falling due. So what we are saying is that during the quarter, we bought 500, is it 500? So I can see far from there. It's 281 million which was bought, and 51 were received in the way of mineral royalties. But overall, I think for the year as a whole, we bought over $700 million to augment reserves. Now, conclusion. What does all this? What I was saying at the beginning, I'm coming back to the same. That in arriving at the decision that we arrived at, we take account of all these factors and see what effect they have on inflation, which is our primary objective. So what we are saying is that inflation has been increasing, and the projections are that if we don't take any action, it will remain above our target range, which means that we have not been able to meet our objective. So that's the starting point in terms of why the decision was made to raise the policy rate. So with that action, it is our expectation that the inflation by the medium term should come within the target range. We are also hoping that the onset of this farming season will turn out at the end of it a good one. So food prices are a major factor in our inflation. Just to give you a sense, the weight of the food basket in the CPI, the Consumer Price Index, is about 57%. So any movement there has quite a significant effect on inflation overall. So our expectation with the action that we have taken is that it will affect demand, particularly those of the non-food items. So you may have to pay a little more, which will make you think twice to do certain things. That is an adjustment which would come in the right direction. But obviously, this by itself is not enough. We need to have other policy actions in the fiscal area, in the structural area as well, to help address the challenges that our economy is currently facing. So we have indicated in our previous statements that monetary policy is one tool. There are other tools that you need to deploy to address the needs and the challenges that faces an economy. So this is where I say I stop and say thank you, God bless.
Is the central bank of the opinion or of the view that it perhaps could be a better policy decision to see to it that government should instead pay resources to Mamba collieries vis-a-vis ZESCO's indebtedness? Thank you.
Good afternoon, Governor. My name is Gladys Luizi from the Zambian Business Times newspaper. My question is around inflation. We know that one of the major functions for the Bank of Zambia is to control inflation. And just as you announced that for the month of October, as announced by the Zambia Statistics Agency, formerly known as the Central Statistics Office, announced that inflation rose to 10.7, which has actually exceeded the target range of 6 to 8%. So you've announced the expectations as well as the hopes that the Bank of Zambia has announced the expectations and the hopes around inflation. But for now, what are you going to do? Like, what measures are you currently going to put in place in case those expectations and hopes are not met as well? And then my second question is the kwacha issue. In 2013, the US dollar was equivalent to about 5 kwacha. Fast forward to today, the US dollar is equal to 13, and this Monday it was actually 14 kwacha. And we know that the currency, depreciation of the currency devalues kwacha savings as well as kwacha incomes for most of Zambians across the country. So what measures are you going to put in place as Bank of Zambia to ensure that we stabilize the currency? We can have one more before Governor comes in to respond.
Good afternoon, Governor. Good afternoon, everybody. My name is Esnat Lungu from Mani FM Business Radio. I have a few questions here with me. I really hope you pick all of them. My first question is, I just need clarity. What is the difference between the overnight lending rate and the interbank rate? I just need to get that clarity from you. And then going to your presentation, you said that the increase in the monetary policy rate, the decision that the MPC just made, will bring down inflation. So to what rate will this be brought down in the immediate term? The other question is, you say that subscriptions for government securities are going down. I just want to find out what you are attributing this to, and could it be as a result of reducing confidence in among investors in the Zambian government? The other question is, you have emphasized on other policy decisions that need to be made in order to address the economic challenges that we are facing currently as a country. What policy actions are these? I'm sure they're on the part of government. So would you mind highlighting these these actions that need to be taken to address the current economic conditions? Thank you.
Thank you very much for the questions. Stuart, this ordinary is not really in our domain, but I will repeat what has been said. I think the government has taken both. They are addressing the Mamba issue as well as having to import, because the Mamba issue, it involves some work to be done to the plant, so it will take time. Meanwhile, you and I, more so the industry, is looking for power, not to work. So they are addressing both issues at the moment. I think that's what is happening. So it's not a trade-off that either or, but it's to address both. But hopefully going forward, Mamba will remain operating. And I think you have seen also the government has putting out the issue on the electricity bill and all that to address the issues of cost-reflective tariffs. I think you were at the address by His Excellency. I think that issue raised, your colleagues raised questions on that, and I think that's what is being followed. So I hope that answers your question. Gladys, on the issue of the current inflation being 10.7%, and then what the current measures. I will get help from my colleagues here. You have the Deputy Governor Operations here, the Director Economics is there, whereas the Director of Financial Markets is right in the corner there, and then you have all the other people here. So maybe, since I've just been talking, let me allow the DGO to start the conversation.
Thank you very much, Governor. I think I was just thinking to myself, I hope was the presentation clear enough. I think as the Governor has covered in his statement, the whole basis of raising the policy rate was, firstly, we took a view of, given all the issues which have been discussed, from the food issues, exchange rate pressures, clearly we were showing, or it was, the data was really showing us that inflation was going to remain outside of the policy corridor over the forecast period, which, as the Governor mentioned, is 8 quarters. So the whole action to raise the policy rate in the manner we have done really first was to see that over the medium term, in other words, by the time we come to the end of our forecast period, really we expect inflation to be back into the policy corridor. Now, I think the Governor also mentioned that in making the decision, there were issues around, well, do you act to make it come down very quickly next month, if it's possible, or does it come down in a gentler way, if you like? So what we see from the efforts we have made now is that by the end of the forecast period, we expect inflation to be coming down into the 6 to 8% band. But it's important to note that, as Governor said, there are other actions which are being taken and which need to be taken to really impact on inflation. The issues around agriculture, and I think was mentioned, if we have, the rains have come, if you have a good agricultural season, we have seen in the past that typically a drought followed by a reasonably good agricultural season, you can see inflation fall quite rapidly in the preceding period, and it does tend to persist after that. So if the right things are done, it's agriculture, it's some of the other structural measures that can be taken, inflation can fall faster than we currently think it will do. But we really act on the basis of the evidence which we have, the risks which we see unfolding, which the Governor outlined, I think, quite clearly in his presentation. So, I don't know.
Yeah, go ahead.
The second one was on the kwacha. It's depreciated, 5 kwacha, you're saying, from 2015-14 now. Clearly, you are right, it has impact on incomes, and here again we're looking at it from our perspective. Our objective is price and financial system stability. We know exchange rate depreciating quite fast, firstly, does feed quite quickly into inflation. That affects people's incomes, it affects people's savings. We know also it has an impact on financial stability because we do have our financial institutions who do have assets in other currencies. So this can also impact on their performance, their capital position. So again, the issue is by focusing on getting inflation back to where it is. And implicit in that is making sure that we have stability in the foreign exchange market, that we can create confidence from other players in the market that things are going to be reasonably stable. They can invest in Zambia. These things are really hopefully self-reinforcing in making sure that in reaching our inflation target, in having relative stability in the foreign exchange market, we are going to be able to affect those very concerns which you raised, which are key. I think those were the two questions, I think, from Gladys, which I...
Okay.
Also.
Yeah, is it possible to beam the presentation I had on the supply and the demand? Yes. Go back, continue.
Control.
You come to this chart. Yes, stop there. Yeah. I think this is maybe I rushed through it very quickly. If you look at this chart, I said on the left-hand side, these are the institutions or people who use foreign exchange. On the right are the ones who generate the foreign exchange. Now look at who is demanding foreign exchange. The Bureau, which essentially it's yours, you and I, if you are buying foreign exchange in the market. Public administration, that's the government, essentially wholesale and retail. These items you see on the streets which are imported, that's demanding on the foreign exchange. Manufacturing, they do also demand, but you see manufacturing, we should have been seeing on both sides, not just on one side. We should have exports, which goes in the non-traditional exports. Then you see construction, at least these are the foreign financed components of the construction projects which bring something. Agriculture, hunting and forestry, you see these hunting safaris, they do bring a bit of foreign exchange. Then you have mining and quarrying, you see that's our biggest supplier. Then you have foreign financials, which I think is related to the question on the subscriptions we are talking about on the other question which was raised. So the point I'm trying to make in addition to what Dijua said is that we need to have more on the right-hand side, right? So that's what is going to bring us about stability in the exchange rate. If we are all concentrating on the demand side, who is going to generate the foreign exchange that we need? That's the question we must ask ourselves. Sometimes it really pains us to hear people saying, no, Zambia, we are an import-independent country. Don't you see that? What is it? Should we be like that all the time? I don't think so. We have lots of areas where we can improve our export to other markets. So for the exchange rate to remain stable in a sustainable manner, supply has to increase a lot more than demand. Right now, you see the depreciation ordinarily where it is, if we had the bigger exporters, they'll be happy because they are getting more for each dollar that they come and exchange. But obviously, the import lobby is quite strong. Whenever the exchange rate moves, the depreciating, it affects that. And we understand that. But also when you have a high debt service, that affects you both in terms of the resources that you have, but also on the kwacha, because you have, for depreciation that is happening, you have to come up with more kwacha for the same dollar that you are doing. So the point to this whole thing of stability, sustainable stability, we have to ramp up our production. As an institution, we buy foreign exchange from those who export, those who come to participate in the government securities because they bring in foreign exchange, which they exchange for kwacha because the treasury bills and bonds are auctioned in kwacha. So in the past, that has helped when they come in, those financials, but as things started to change, they moved out. We showed you that they are declining in terms of their holding. So that's one of the reasons why we have to have macro stability, because that will ensure that others come to take part in our economy. So production and export are very, very important. Look at the current account, which I talked about, is in deficit. That means that you are not exporting as you are importing. We are paying out more than we are receiving. Those are the pressures that our economy are under. But they don't need to be permanent features. They can be reversed. Then Esnat had quite a number of questions. What's the difference between off and interbank rate? I'll ask Isaac maybe to clarify that.
All right. Thank you, Governor. The difference is this. The interbank rate is the rate at which commercial banks lend each other money. Banks, like everybody else, do also run short of cash. So when they run short of cash, they can approach their colleagues, which are also other banks, who can lend them money. And they can lend them money either on an overnight basis or even longer than that. So the rate that they charge each other is what is called the interbank rate. So interbank simply means between banks. And then it can also happen that banks may not have enough cash to lend to their colleagues. In that case, those banks that are trying to borrow can also approach the central bank, the Bank of Zambia, to borrow money from us. So, but we do charge an interest rate. And that interest rate that we charge them is called the overnight lending facility rate. So we have this facility which is open to the banks. It is important to facilitate transactions in the market, because banks by their nature are transformers of maturity. So they borrow short term, they lend long term. So there are times when they may not have money when the owners of the deposits come along, and so they have this facility with the central bank. So that's pretty much the difference between the two. Thank you.
Thank you. Maybe take on why the subscriptions in government securities. What are the factors that have contributed to low subscription?
One of the major factors that drive subscriptions to, obviously, it can also be driven by the investor sentiments themselves. But by and large, the subscription is a function of the liquidity that is in the market. So if there is very little liquidity, in other words, there is not enough cash to go around in the market, then it will translate into increasingly low subscriptions to government securities. That's on the local scene. But for foreign investors, they might have concerns about where the direction of the economy, where it's going, and they may also have their own issues with their own portfolio management styles. But by and large, I think the economy, the way it's moving, does affect the manner in which foreign investors interact with our market. But domestically, it's largely an issue of liquidity. So when there is not enough cash going around in the economy, then you are going to see these subscriptions go down.
Thank you very much, Isaac. I think the other question, to a large extent, the DGO has answered on what rate do you expect this action to bring? So our target is to bring, as you said, within the target range. The rate per se is not targeting that it will be, we bring it to that, but our effort, that's why we have a range. Previously, we used to have a point target, but that was unrealistic, so that's why we adopted a range of 6 to 8%. So the idea behind this action is to bring this towards that range. And he has already explained, and I did explain, that you can either try to do it very quickly, which means that the 1.25 percentage points that is too small. You need to have a massive kind of increase in the policy rate. But that also chokes other things in the process. So I'm sure you know the adage that don't kill the goose that lays the golden eggs. So care must be taken to balance these. So it's in the medium term, not tomorrow or next month we do that. But as you said, if food prices were to rise, those change very quickly. I mean, you see it on a daily basis. If you have tomatoes, there's too many suppliers of tomatoes, the price just comes down. But other prices don't come down quickly. For example, wages is not something which comes out quickly, so industry manufacturers have to look at that in a slow way. So that's the idea, is to bring it within the target, within this forecast horizon. The last question you had was on the, what are the other policies we're talking about? I think we did point to the fact that the fiscal policies are very critical, because fiscal policy has more long-term impact than monetary policy. Monetary policy is more of a short-term interest to adjust quickly. Somebody told me a story of saying that, you see, if you are on the sea, there are big seas, there are big ship and small boats. So think of monetary policy like a small boat which you deploy to maneuver. But if it's a big ship, it takes time to move. But when it moves, it really has a bigger impact. So think of it in that way, that fiscal policy, that's why we keep saying fiscal deficits are to be within the target. We talk of the clearing of domestic arrears, because what is happening with domestic arrears is that the people who are not paid, they in effect extended the loan involuntarily to those who haven't paid. So if you haven't paid your debt, that's what you have done. You have got this loan, but you are not paying. That person who gave you that money has a hole which they need to plug. So if that persists, it has serious effects, because that means if I owe him something I don't pay, he owes her something he won't pay. So it becomes a chain, and that in time kind of undermines confidence, because you say, no, whenever I supply you, I'm sure you have seen these things even happening at personal level. There are people who other people don't want to lend money to. Say, no, that one, no, don't give them, because they want to give you, you know? So that creates that problem. So we want this to be addressed, and the minister has announced that they want to address. You saw in the liquidity chart that I was saying, the government is one of the major spenders of money in the economy. But in the particular instance that we are talking about, they are actually withdrawing because we are making foreign debt service. So high debt service is also affecting. You have seen our reserves coming down. All those are matters that need to be addressed. We have structural matters, I think some of which in response to Stuart's question I was talking about, the energy sector. There are all these reforms that need to be done to ensure that we have cost-reflective tariffs, and so that we can have more investments coming into the sector. Not only that, you have also people, individuals, can also invest some little generating capacity. It happens in other places where individuals, you put up small plants off grid and then they get connected to the grid, but the arrangements now are not very permissive to that. So there is a whole range of other areas that we need. So that's why we summarized it in fiscal policy measures and structural measures. So there is a whole lot that needs to be done, including the labor laws and all that. So I hope that helps. Those were the questions.
Thank you very much, Governor. Second round, please your name and the institution where you're from.
Thank you so much, Governor. This is Chota Prudence from Business Post, a weekly business newspaper. Governor, in the first quarter of this year, you decided to increase the interest rate by 50 basis points. And there were some reasons that you gave for doing that. So I would like to find out, among those reasons you gave, what are the things that we've achieved? Because we've increased today, and there are some of the things we've listed to say we want to see things like inflation, we want to deal with that. But even in the first quarter when we did that, we've seen inflation has continued to increase. So I want to find out what are some of the things we've achieved from the time you increased the interest rate in January, in the first quarter of this year, sorry. And if some of the things have failed, what are those that have failed and what are the reasons? Then just another question on GDP. According to NKC African Economics, they released a quarterly report last week for the country, and they did mention to say the Bank of Zambia will be increasing interest rate by 100 basis points, but we've seen today you've increased by 125 basis points. It means they were not far from the truth. And then in their report, they also indicated that the GDP of the country might close at 1.7, and you've indicated today to say it might close at 2. So I wanted to find out, do you think it will go as low as 2% as you've projected, or as NKC projected? Then still on GDP, you did mention that there were issues. Some of them were concerning the mining construction and other constructions in the country. So, and other construction work. I would just like to hear a comment from you. There is the 20% subcontract policy for our local contractors that has been a topic of discussion and that the government wants to implement. Do you think the 20% subcontract policy is enough for our local contractors, considering that most of these resources that we are investing is money gotten from outside in form of loans? And you know, when I've been hearing words such as, when giving a contract to someone, there are certain things that you have to consider. There is A, there is B, there is C. But realistically, if we, for example, did give a big share to our own local contractor of those resources, you'll find that we'll have some of the resources remaining in our own country. As a result, we are going to have money. We are going to have more employment. We are going to have more money in our economy. So I would just like you to comment on the 20% subcontract policy. Do you think if maybe it was increased, we could see more money flowing in our economy? Thank you.
Good afternoon, Governor. Taonga Mitimingi from Bloomberg News. Now, in the fortnightly statistics under banking systems, claims on government, in that table, under the column titled Loans and Advances, it shows that as of July this year, the government had owed about 4.6 billion kwacha to the central bank, and by August, that had gone down to zero. Similarly, in September. Now, I would like to get an explanation I'd like to get the explanation behind this reduction.
Good afternoon, Governor. My name is Joseph Tamaribanda from CBC TV. Wanted just to get clarity from you. With a bid to have a private sector-driven economy, regarding the decisions that you've made. Sorry, in regards to the decisions that you've made, how do you see the attainment of the private sector-driven economy with regards to how expensive it has become now to borrow money from the banking institutions. Secondly, with the measures that BOZ has taken, how does it impact the private sector with regards to ensuring that there is more production that would in turn plow back liquidity into the economy? So those are the two questions that I wanted clarity from you, sir.
Okay. Thank you very much once again for the Chola. What have we achieved with the 50 basis points? Quite a bit, because if you look at inflation had stayed within the target. I think we raised the policy rate in May, because in August we did not adjust the rate. So look where inflation was, it had stayed within the target range. So from that perspective, that measure was effective. But I think those of you who have taken a keen interest in looking through our statements, you note at every stage, at every juncture, even like today, we do point out what the risks are to inflation, those risks which, if they do materialize, would make inflation go up, and those, if they materialize, would make inflation go down. So I think I would urge you very strongly to pay particular attention and follow those developments, because if I use that now as a way of trying to explain to you that this is a moving trend. There are so many parts which are moving. So when we take action and the other areas do not move in tandem, then there's some friction somewhere. All these things we do are trade-offs. So what I'm saying is that there were upside risks which we are talking about, that if we don't address, for example, the fiscal side, deficit continues, debt continues, debt service continues, it will have implications. So we have seen there is liquidity crunch. Many people have commented, including the president, on the fact that the tax revenues that we are raising are only meeting principally the debt service and wage bill. So what happens to production? It means that we are not investing for tomorrow. We are eating today. So those have implications. Today, we have people who are not in the labor force. Now they are in the labor force. They want to eat. But if we are not investing, there is what is called investing in investing. So education and all those are areas of that nature. So if you look at what has been happening in different areas, things have changed. That action that we took has worn out. That's why we have to come up with new measures. Somebody once said this, what brought you today is not what will take you to tomorrow. I think we have to bear that in mind. You came today, you can't count on the fact that tomorrow will be here. You may have to use another mode of transport. You may have to do something else. So these are issues that if you stay static and don't pay attention to these changes, you get overrun by issues. In May, did we know that we do at least know the extent of the shortfalls in the maize output? We talked about that there would be a shortfall, but did we know the extent? I guess not. Did we know the extent to which load shedding would affect us? I don't think we did. So there are all these developments, but there are, each one of us, we have a responsibility in certain areas. Our responsibility is on the inflation, and that's why we are here today. We are trying to do that. So all we are asking is that all other players also play their part, and together, I think we can achieve the intended targets. But if others don't, then we have this problem that things don't move. If we make pronouncements and we are not following through, that's your duty as a journalist to say that, but you told us that you are doing this, why did you not do that? So that we can explain to you why we have not. So we are trying to do that through this forum, to explain that, no, we did this is what we are seeing, and this is where we are going. So we hope that helps you to follow. Now, on your question of these other people who are predicting what you will take, that happens all the time. But it's not from without. I think Taonga has asked a question here which demonstrates that. He asked a question looking at the fortnightly statistics, which is a publication which we produce. So people who are interested in that and following those developments will quite fairly accurately predict what the next quarter of action will be, because they are following the events, the developments in the GDP that we are talking about. These are not just falling from anywhere. They are actually matters which we have said. So if you put this information together, you will be able to tell. In April, we had the IMF mission here. They produced a report which is on the website of the IMF on Article 4. There is a minefield of information on the various aspects of our economy. So those who are interested enough to look at that will see the economic intelligence unit, they produce information. The rating agencies, they produce information. So if you put all these together, you have a very good sense of where things are going. And that's why we are giving you this information, for you to use it, so that you are not surprised when certain things happen. So, yes, that was their guess. But are we looking at the same things? Maybe not. They are not in the room that we are there. You would be surprised if they were in our room, because that's now spying. So we look at these facts, and based on those facts, we make our decision. So that's how. It is not very difficult. If you wanted to follow, you can pretty much know which direction things would go. And it will surprise you if a different decision is made, because you say that, what is it that you are missing? Then that spurs you to do more research. So I hope that helps to explain that aspect you have asked. Now, the local contractors and all that, but maybe before, let me just answer the easier question from Taonga, because that I think what happened was that we have been in a conversation with the government in terms of how are they going to make good on the indebtedness that they had with the central bank. I think this is a matter which has been of great concern. So we reached an agreement where they converted that exposure to securities. So that's why it appears as zero. It's not that they came up with the cash 4.6 billion that we are talking about, but instead they issued some note, which is a market instrument, and it transformed the nature of exposure. That's what that is. So on your other question of the 20%, I don't think we are in a position to comment on whether it's adequate or not. But I think you raised an important point behind that question in terms of the retention of resources. I think these are things we have also pointed out as an institution, that, you see, the debt service, we may have eaten the money, but now we are paying back. So it's painful, isn't it? It's like we didn't eat, But if we didn't put it into productive sector, then it is even more painful, But if we put it into productive areas, then those projects will begin to pay back and we'll be able to move forward. So that's where I think this issue of careful use of resources comes about. But to your question, I think this is an effort by government to try and encourage local players. 20%, it may not be much, but if it can be consistently applied, then we can begin to create the local capacity. Now, it's of a great concern that when you look at these projects which are done, they are done by external people on their own. What does that mean? It means that we are not creating the necessary capacity to even maintain those projects once they leave. So again, we'll be back to borrowing to get some people to come. So that is a thing which this 20% is trying to address. But we have also seen some of our colleagues that when they get these contracts, they are not patient to wait and they do the work. They will sell the contract to the same people who are trying to get the business away so that they get their skills. So it's a struggle. But if we consistently do that, we can begin to build the capacity. We have engineers. It's very painful to see that engineers can be unemployed in a developing economy. That's not a good use of our resources. How long does it take us to produce an engineer? It's a lot of money and years. So this is where we are saying also, let's not be proud of ourselves by saying that we are import dependent. Surely do we have to import everything? I don't think so. We can produce some of the things we need. We can reduce the dependence on others. Because you see, when you are depending on others, they are looking after their own interest, isn't it? So your interest is secondary. Sometimes that's why you find that even in this cross-border, you are closed out. You wanted to use, you say, no, sorry, you pass here too often, so we'll put a tariff here so that you don't pass. Those are issues which must concern us, Zambians. What is it that we can do? They are 55 years after independence. I mean, our forefathers, the ones who started the Zambia, they didn't even have as high education that we have. But they had the foresight to give us these things. What have we done to build on that? That should be your preoccupation, especially the young generation. Where is your future? You know? So capacity, we need to create that. You see, us, when we go abroad, the preoccupation tends to be to buy material items. You go and when you go and buy iPad or something. Before it used to be you go and buy a big stereo. You go back. But others, when they go there, they pick education and use it to resolve their issues. So that's what we need to be focusing our attention. Our education system should be geared towards this. It's very painful. We spend money here who have children to send our children to school. After they leave school, there's no job. So that's the real challenge that we have. But it's not a job for any one individual, government alone, or anything like that. So I hope I have answered your question. Now, the last question, I think I'll ask also some help from DGO here, or even the Director of Economics, on the private sector-led economy. What are we doing? Maybe you can start there.
So just repeat the question for me, if you can.
That's Joseph.
In a bid to have a private sector-led economy,
yes,
with regards to the policies that you've made, I wanted to find out how attainable is it now that money is getting more expensive to borrow for the private sector. So how attainable is it to have a private-led economy with a higher much expense of borrowing money?
Okay. No, thank you very much. I think it's a good and important question. I think let me start perhaps where the governor ended, which is that in answering the last question, the point made that the challenges we face are not for one person alone. It's not for government alone. It's not for the central bank alone. It really has to be, as a country, a collective effort. So there are a couple of things one can think through before I come to specifically what our role is. Firstly, it's policy. what is the policy. Now, if you look at the policy framework now, I think you look at the 7th National Development Plan, you look at the Economic Stabilization and Growth Program, you look at the previous budgets we've had, I think you can say you've got a strong policy framework for how we should develop. Some of the issues which had been identified in the past, hampering private sector, it wasn't just firstly having overall a liberal environment, but it was how do you deal with infrastructure? How do you do with education? How do you do with health? Some of the things the governor has also just been saying in terms of their importance in building capacity and competence. So again, the policy framework, I think, in moving in that area is there. And so the question there is just how effectively are we executing that? And then the structural policies, again, the infrastructure and so on, which is going on. From our perspective as a central bank, again, we supervise the financial sector. Our objective specifically is price stability, financial system stability. Why is that important? Again, we're trying to encourage particularly the private sector. Because if you think about the central bank, our job is not to lend to the government. It's to manage the financial sector in a way in which they're able to take money from savers, to invest in those people with ideas and ambition who are going to create things for Zambia. So our key points, firstly, is inflation. It's important to control it, because if we don't control it, how are you going to invest? How are you going to have the certainty that I should go back to the village and start investing there because there are opportunities? Whether I'm thinking about planting trees or agriculture or whatever. Or I should put a bit more money in my shamba near town. So having price stability is critical. These things are going to frame how you think about what you invest, how much you have to invest. Because again, inflation, as has been said earlier, it robs your savings. While you're sleeping, Governor often says, inflation is like a thief in the night. You're sleeping, it's taking away. So it's very, very important that we have that price stability. Financial stability is also important. And what we've seen now is that these two things, we used to think about them as being very separate. They're not. These things can cross an impact on each other. So again, we must make sure that the financial institutions can do the job they're meant to do properly, that they're well governed, that they're able to innovate in the way in which they're providing services. And in that way, we're really saying, can you provide cheaper services to people so that they can save better and therefore have an ability to invest? And I think in this area, we've been talking about what the Bank of Zambia is doing in terms of financial inclusion and in generally trying to strengthen the financial system. So now you come to, well, you take a measure like you've taken today to try and to control interest rates. Yes, you raise the interest rates, and that means cost of funding will increase. It will. But the point the governor has stated in his address, and then in I think in a previous question, is that what is the big picture here? We have seen inflation rise. We have a target. If we sit back and say we do nothing, first of all, we're not doing our job because we have been given a target. But more importantly, we are not creating a base where people are confident that when these people have a plan, they've had a target, we know that they're going to work to achieve that target. And we know that if they achieve that target, I can then plan with some confidence that I won't wake up today and the Bank of Zambia just decides, well, we can do with inflation at 15%, it's okay, because we don't want to take tough decisions. That's not helpful for the economy in the long run. And just as interest rates can go up, if you are successful in the plans you have, they can also come down. And I think we've demonstrated that. When we had the crisis in 2014 and 2015, the bank took some very tough measures. We were able to contain the pressures. Once those pressures were contained, we were able to lower interest rates consistently for some period of time. And then again, as Governor was saying, where you've come to now, the same things won't take you where you're going. So conditions change. We didn't think the drought would be as bad. We didn't think electricity would be as bad, and so on. The world economy we didn't think would quite be where it is now. These things change and you have to respond to them. But the key thing is, if you're consistent, if you communicate effectively, you'll be able to control things over the medium term, and people can then look through an immediate challenge. So in other words, if I can think about, perhaps as a last point, just make this to we all have, well, not you all have children, I should say, those who have children. You have children in school. School is important. Perhaps you have a challenge with school fees in a particular point. Something has happened. Maybe you've lost a loved one and something. You're having difficulty in paying school fees. Your immediate point is not, let me stop my child from going to school. Unfortunately, for some people, if you don't have insurance and so on, maybe these things are what happens. But the key is that you have to look through this challenge. You say, what's important is that the child goes to school. What can we do to make sure that we continue that process? And I think that's really the challenge which the central bank has, is that we have to tend to want to look through the challenge. What do we do to meet the challenge in front of us? Because we know that if we are successful, it creates a base for other people to do what they're meant to do.
Those were the questions. Thank you.
Yes, please. I think at that point in time, we'll come to the close of our briefing. We have the presentations for those of you that will be handouts. We've got them outside, but we have already shared them with some of you that are already on our WhatsApp group.
See, there's one burning question behind there.
One last question. Who is it?
It's Jeff.
Jeff. Thanks, Governor. My name is Jeff Kpemwa. I write for Metals Platts and the Southern Times. Governor, I just wanted to draw you back to the falling copper exports during the quarter under review, which fell down by 23.2%, lower than the previous quarter. I noted that you didn't give the reasons to that effect, but having sniffed into the mining sector, one thing I learned is that there's been a reduced production by a lot of mining companies because of various fundamentals, including lack of incentivizing the mining sector, and of course the impasse on the mining tax regime. I just wanted to find out from the bank's assessment what could have been the reason to this drop in the production of copper and the decline in export volumes. And then I also wanted to draw you back to the import cover. There's just been a slight increase from 1.7 months of import cover to 1.8. Going by the SADC aspirations, Zambia should float around 10 to 11 months of import cover.
6.
Yes, okay, thank you for the correction. Now, looking at, I know that there's been a school of thought. Several scholars have argued if we can get to there like the tariffs are being considered, it would be better. So I wanted to find out, Governor, so do we see ourselves getting to 6? Because given the increasing debt ratio and the debt servicing, we don't seem to be moving beyond 2%. So I just wanted to get your quick response on this one. Maybe just a quick ride on the IMF. I know you were privy to the just ended meetings with the IMF team. Did we by any chance secure the $1.3 billion? Thank you.
It's big note. Well, you asked the 3 questions, which are 3 people could have asked. So it was not one last. Okay. But the first question, you answered it yourself. So I thought you were making an observation to help us understand. So I don't know what else you want us to say, because you visited the mines, they told you that. So that's what you also say. There's nothing different, from what you gathered. It's exactly that. So your fact finding was effective. So then on the import cover, first I think let me just say, what is the difference between a target and a projection? I think the target, the way we understand it, many of us, is that it's something you are aspiring to get to, isn't it? So it helps you galvanize or organize your efforts, how you are going to do that. So it may not be something that it's like a dream, you know, aspiration that you have to get that. So SADC came up with this target. COMESA also has the same as part of the integration. So that's what all countries, through the protocols, we signed to aspire to. But from time to time, we do get into the woods. Shocks come. So for many of our countries who are commodity exporters, this is a major challenge. That's why we're talking about the need to diversify the economy, because you can do that on a sustainable basis. You see now, copper prices are falling. We are now again feeding it. As if we didn't know in 2015, as if we didn't know in 1974, as if we didn't know in 1965. You see, this thing has been with us. So we are getting warnings. Don't depend on this change, but somehow we are addicted to it. That each time the prices kind of come up, we stop doing what we need to do to ensure that we don't suffer. Well, these things move in cycles, and when you have one commodity on which you depend so much, you get that problem. So we have shown you where else can we get foreign exchange, unless of course we borrow, but look what it comes with. Very expensive interest rates. We are no longer eligible to get cheaper concessional debt. So that idea you're talking about, the IMF game, that was one thing, because for low-income countries, the interest cost now is zero if you are getting from the trust fund. So that's why people have said, no, why don't you get on this? But of course, it comes with other requirements for you to do what you agree to do. So you have to agree that I will do this. So this is why we talk of balance of payment. That's what will go towards supporting reserves. But there are not many. There are hardly any who give that anymore. You know, so it's only a few institutions. Now, sadly, this is also augment the point the DGO mentioned of why we worry so much about inflation and macro stability. It's what all these multilateral lending institutions look at. How is your macro situation? If your debt, your deficit and debt is not in order, they are scared that if they lend you money, you misuse it. It will go to an unintended purpose. Then you fail to repay because it's other people's money. So that's why it's so important for us to show that we are good for it. We can use this resource very effectively. Zambia also, I think you have given me an opportunity to say something here. We have devalued money. What do I mean by that? People talk of $1 million like it's nothing. But $1 million, friends, it's a lot of money. But in our case, you say like 2 million, it's like it's nothing. But it's a lot of money. If you take the current exchange rate, that's easy. How much? If you have 1 million, that's 14 million kwacha. Now, if we gave you that money, what would you do? How many schools can you build? What can you do? But somehow, we have come accustomed to the fact that this is not mattering. So it discourages. We have become so high cost. This is what we need to address, to the point which was raised earlier. The question is, we need to do that so that we can produce more efficient production. So to your question, can we achieve this? Yes, it is achievable, but we have to do the right things and do them consistently. But not in the way we try this, try that, not in a consistent manner. We will not achieve it. But achievable, yes, it is, with an emphatic yes. But we have to get our house in order. So on the IMF, I take it that we are joking on that we are getting, because there have been some announcements. The ST did inform the nation on the outcome of the discussions, that the further discussions are going to be held on this matter. So, no, we didn't get the 1.3. We would be very happy here if we got 1.3 because it would be a shot in the arm. Our reserves, which are, we said 1.5, that would be 2.8 overnight. So, and you'll see, if we did that, how now you have more friends coming to want to work with you. I'll tell you a story. I mean, that time we were in the prospect of getting it, when we were in Washington, we had lots of people come to mingle with us. They said, no, these are the ones who are going to receive 1.3 billion, you know? But the moment now the story changed, that date, they hear Zambia, no, these are high date, you know? So good things go to follow other good things. So when you are doing something right, you have many friends. The moment you start doing that thing, even who you thought was a good friend starts distancing themselves instead of helping you to overcome your difficulties. So we have to hang together because at the end of the day, we have nowhere to go but in Zambia. This is our country. We must work to ensure that it's good for us and our children, their children. Thank you.
On that note, colleagues, we have come to the end